Good afternoon, everyone, and welcome back to the next session for the Middle East Investment Summit. We now have a great panel ahead of us entitled Innovation in Products and Trusts, a Hive of Activity. And I would like to introduce you to the moderator for this session, Simon Gray, who is the Head of Business Development and Marketing at BVI Finance. So Simon, over to you.
Thank you very much, Fiona, and indeed to Terrapin and the Middle East Investment Summit for putting together this virtual platform in these very interesting COVID times. And welcome to all of my guests. An impressive list, somewhat humbling when you look at their very impressive backgrounds. I'll do a short introduction to each, but I'm conscious that we do need to move on to the questions with a degree of speed. I'll begin with Philip Ireland, who's DIFC based, and he is head of Maples and Calder's, or rather Maples Group, Fund and Investment Management Corporate Teams in the Dubai office. And he has both broad BVI and Cayman Island experience, as well as DIFC. From Walkers, we have a partner, Tom Cochrane, who is a leader in their corporate group and specialist in the investment fund space, venture capital, and also private equity funds. With a list of impressive clients leading from sovereign wealth funds, financial institutions, and private equity firms. To ensure equilibrium, because we're talking not just about funds, but trusts, something that BVI has some very good pedigree in, we have Simon Filmer, who is Dubai-based and is a long-standing resident of the BVI prior to moving to Dubai. He's the global lead company formation at VISTRA Group, and again DIFC based, with a very, very impressive background in company formation and knowledge and trusts. I'm also very pleased to have with us Philip Graham, who's a partner in the BVI office of Harneys, a leading law firm here, and he is in charge of its investment funds and regulatory practice. He's licensed to practice in the BVI and in the Cayman. And he also is chairman of the BVI Investment Funds Association. And one of his pet fond subjects is very much the blockchain, cryptocurrency, and digital asset space, which is highly topical for some of the funds we'll be talking about. I'm also delighted to introduce Jeffrey Kirk, who's the managing partner of Appleby, British Virgin Islands office, and he leads the practice here on Ireland in the BVI, specializing in public and private M&A, capital markets, and the full myriad of financial services, banking, finance, investment funds, PE, reinsurance, etc. It is a somewhat humbling experience, but I'm delighted to have such an impressive cast with us today. So to begin, something of an understatement, but the Chinese expression, it's an English expression adopted from the Chinese, may you live in interesting times. 2020 has turned out to be somewhat differently from what we all anticipated. And in a way, it's perhaps an opportunity. An opportunity can often arise out of a crisis. But one of the key things we'll be talking about today is really the growth of innovation of funds and trusts, and what the world will be looking like in the near future, but also specializing in recent innovation in some of these very important products. So what I propose to do is I'll begin on the fund side and really ask each of you to give your views on recent innovation in the world of funds. And perhaps a good example might be to talk about the concept of incubators and the approved funds, which we certainly have here in the BVI, both of which are topical for hedge funds, family offices, and of course the digital asset space. Phil Graham, I wonder if I could ask for your comments first.
Of course, and thank you very much indeed for having me, Simon. Very much appreciate it. So the Incubator Fund and the Approved Fund spun out actually of me returning from a capital raising conference up in Boston, when I was approached at the end of the conference by someone who has a US domestic fund, came along and said, we actually had the opportunity to bring in a foreign investor. They had a $5 million check ready to write, but you know what? couldn't be bothered to really pull together the offshore piece. It was going to be too complicated. It was going to cause too many headaches. It's going to be too expensive. They traditionally relied on Cayman, as a lot of people do, and I went away from that thinking, this is a real problem. This is a real problem in our industry. The barrier for entry for sort of startup emerging managers has become harder and harder and harder. When I started doing this, you would hear people say, well, you must have $1 million to launch. Then you would hear you must have $10 million to launch, then $100 million to launch. Now you go to ridiculous emerging manager conferences where they call anyone under $1 billion an emerging manager. It's a ludicrous. And so you think of people where this industry started was people just trading, people trading in their bedroom, people trading on the side when they were running something else. And they couldn't get going. And all of the regulatory red tape that came in post sort of 2008, but also all of the cost that was coming in. And we've seen that more and more. And 2020 has been a real year for that. The Incubator and Approved Fund were then squarely aimed at allowing people to get started, to develop a track record with the least amount of cost, but still the most appropriate amount of regulation. Strip away everything that's not needed for a small manager and allow them to get going. Because it's such a chicken and egg conversation for all emerging managers. They go to an investor. They say, I've got this great idea. I've got this great track record on paper. What can I do with it? And they say, well, look, if you've been doing this for the last 10 years and you've got a fund, I'd love to invest with you, but you haven't. So, and they say, well, give me your money and then I will show you that I can do it. And it becomes a ludicrous conversation when you're doing capital raising. So this allows you a vehicle. This allows you to develop a track record. And I was so proud of the way the Financial Services Commission jumped on this. They worked with the private sector. It was a real public-private combination. BVI Finance then were fantastic at getting the name out there and getting the word out there, and it's been an enormous success story.
Great. And you mentioned 2020, you're referring to the year, but of course they're also known, I believe, as the 2020 Fund. Can you just briefly describe what is meant by the three 20s there?
Sure. Yeah. I mean, that's for the Incubator Fund. The Incubator Fund is the most stripped back fund imaginable. We called it the Incubator Fund actually because so many people colloquially in this industry, that's what they want. They walk around and say, I need something to incubate my idea, or I need a vehicle. And then I can remember coming home and Googling incubator funds, and nothing comes up. There's no other jurisdiction on the planet that offers something called an incubator fund. And so we said, well, let's call something an incubator fund. It was a horrible SEO play, frankly. If people are going to Google incubator funds because that's what they want, then BVI pops up, and it worked. You know, it was something that attracts people. The 2020 is absolutely right, Simon. So that means that when you can have a maximum of 20 investors, you can have an AUM within your fund that's a maximum of 20 million. And each investor that comes in has to put at least 20,000 US or equivalents in another currency in. Those parameters allow the FSC to get comfortable with stripping back the regulation. So when people talk to me about how has the FSC got comfortable with such a product in a world in which all other jurisdictions have gone in a different direction, and you look at the increasing red tape, it's because we've set those parameters. And their viewpoint is you can't do much damage with those parameters. You only have a short period of time in which to develop it. And then at the end of that period, the 2-year period, or maybe with a 1-year extension, you have that ability to say either it hasn't worked and you can wind it down very easily, or you can say, you know what, this has gone somewhere. This has really flourished. And I always talk about those parameters in being nice problems to have. If anyone's going to start having problems where they have more than 20 investors, or they have a greater AUM than that value, that's a nice problem. And we can then move you on to one of the other great sort of regulatory fund products we have in the BVI.
Brilliant. Well, no, thank you very much. To ensure equilibrium, I'm going to shift over to Dubai now. Tom, I wonder if I could begin with you. In terms of the approved fund regime, because I believe that was introduced at a similar time to the incubator fund regime, and that's particularly good for family offices, is that right?
Yeah, I mean, just as a starting point, just to add to Phil's comments on the incubator fund, I think to put it in a Middle East context, you know, it's very much a two-speed market over here. So we see, you know, funds that are, you know, often backed by sovereign wealth funds or other very established managers who are raising, you know, maybe in the billions. And then you have a lot of the startup and emerging managers that, like Phil said, the compliance and regulatory red tape means that for a lot of other jurisdictions, it's not feasible to get a small fund off the ground. And I think that's what the incubator fund has really delivered. It's an avenue for these startup emerging managers to dip their toe in the water, try out a strategy, try out some different strategies perhaps. You don't need many service providers. It's quick, it's cost effective to set up. So I think we've seen that really appealing over here, because I think by comparison with some of the other onshore and offshore jurisdictions, it's a lot more timely, it's a lot more costly, and it's just a lot more difficult to set up a fund. So I think the Incubator Fund, just to sort of echo Phil's comments, it's been a real success and it's something different in the market. So I would definitely underscore those comments. I think the Approved Fund is an interesting concept as well, because it sort of sits above the Incubator Fund and below the Private Investment Fund regime. So you've got an opportunity here, and like you said, family offices who maybe don't want to be fully regulated, but they want something that gives them a sufficient amount of credibility. The Approved Fund can be a good option. I mean, just one other product that the BVI offers that we've seen family offices sometimes sort of have a look at quite closely and implement is the segregated portfolio company. So we've set up some SPCs, and that can be quite cost effective as well. And you have the benefit of a family that might have different asset classes or different strategies, and they can create different portfolios. And so the different family members can elect to go into different portfolios to pursue certain strategies. They may pass on certain portfolios. That's a really good way of having sort of one umbrella legal entity, but then being able to quickly and cost effectively set up new portfolios as opportunities might arise.
Brilliant. No, and I think they both the Approved and the Incubator date back to around about 2012, 2013. So I think they've been around for a while and certainly been quite embedded and a great success story. But of course, more recently, there's been success with the PIF regime. I'm going to switch back to the BVI. Jeff, Kirk, can you fill us in on the recently launched private investment fund regime?
Yes, certainly. Thanks, Simon, and thank you to all your panelists. It's good to be on this panel. Certainly, I think we're all aware of the growth of private equity over the last 20 years or so. The figures are astounding. It's the investments and the performance in private equity funds has outpaced public capital markets by some 40%, according to the latest McKinsey report. And what has happened historically in the BVI, the closed-ended funds regime was unregulated. Historically took the form of perhaps a BVI company or a limited partnership. But with developments emanating from the EU, which has required greater transparency in relation to international financial center offshore funds and closed-ended funds, they have required that closed-ended private investment funds are regulated or recognized as they now are in the BVI. So as a result of this, legislation and regulation was introduced late last year and effective from the beginning of this year for new private investment funds and required from the middle of this year for grandfathered funds. These funds now have to be recognized in the BVI. And when I'm saying recognized private investment funds regime, again, these are generally closed-ended funds and those funds that catered particularly for the private equity market. The requirements, as Phil was mentioning in relation to incubator and approved funds, I think have been very well balanced. It's the requirements are not really more onerous than what they would have existed beforehand, and generally well managed private equity funds. So we've seen quite a healthy appetite and uptake in terms of previously unrecognized and unregulated BVI private equity funds taking up and being recognized as private investment funds under the new regime. And I think that's to some extent been a good development, because it certainly, in terms of the managers, it gives them and their investors some comfort, but in a way in which is commercially viable and doesn't take away from the attractions of setting up these funds offshore. And I think also one point to note, in the BVI, in 2017, we introduced a new Limited Partnership Act, which is a very dynamic piece of legislation, very innovative in its operation and very well suited to the private equity fund structure, limited partnership structure. So I think that's been two very welcome developments over the past few years.
And thank you. That was a very, very helpful summary. I think one of the important things that we've discussed so far is the capacity to innovate and change is unrelenting. It just keeps evolving. I'm going to stick on funds, and I do want to then move on to the very important area of trusts with Simon Filmer. But if I could switch to Philip Ireland, I think one of the core things we're seeing change in the world is the growth of digital assets and digital funds, crypto funds. My understanding is that the funds we've described, certainly the incubator and conceivably the PIF, lend themselves very well to both of those. Have you any thoughts on that? What trends are you seeing?
Yeah, thank you, Simon. And you know, that's an interesting point. I mean, obviously, I'm sitting here in Dubai, and there are a lot of tech-focused entrepreneurs in the region, as those who are based in the region would know. And certainly, in terms of starting your fund product, cost is a key consideration, if not prime consideration, from the outset. And certainly, in my experience, and I'm sure Tom would vouch for this, from inception, people are looking to establish a fund with the least amount of bureaucracy, and certainly the ability to have an unlimited portfolio of assets, including digital assets. And so certainly I have spent a lot of time over the last little while, including during lockdown, talking to various people about setting up incubator funds. And it's definitely, and as Phil Graham says, I mean, it is unique. There aren't any other jurisdictions that offer this product. And so for startup managers, and certainly people who are looking to have an eye on the future, where they may get some traction, they may not, the incubator fund is the way to go, and certainly it's played out very well in the region, as has the approved fund. And just I know you'd asked me specifically about crypto, and I know that there's some legislation that perhaps we can touch on at some stage that's going to specifically deal with crypto assets, and that's a new sort of wave of legislation that's coming to the offshore jurisdictions generally. But if I may just touch on the private investment fund regime, and I know, sorry, it's not answering the question that you'd asked me, but if I may, just while I can, in terms of the private investment funds regime, clearly there are other jurisdictions that have similar products, but one thing that strikes me is that there is a little bit more flexibility in terms of the BVI product, specifically with respect to the possibility that you may be able to set up a single investment fund that may not necessarily require regulation. So for those managers who have perhaps smaller funds or single investment funds, it may be that we could advise them that it may not be required to be registered as a private fund in the BVI, whereas other jurisdictions such as that type of fund structure would be registerable. And I'll just, if I may, just touch on the auditor requirement as well. I mean, obviously all of these funds, with the exception of the incubator and approved funds, don't have to file audited accounts. Private investment funds do, but there isn't a requirement for the auditor to be BVI based as there is for other jurisdictions. So apologies, I haven't really answered the question you asked me, but hopefully
no, well, it was still very informative and much appreciated. I'm now going to move on to a vital discussion on trust and succession planning. Something which is integral to many of the audience in terms of the Middle East Investment Summit. And Simon Filmer of VISTRA Group is an authority on the subject. Simon, can you tell us something about the trust and succession planning industry within the BVI, and perhaps to focus on PTCs and the VISTRA Trust in particular?
Sure, yeah. Thank you very much, Simon, and thank you to everybody for joining us today. Noting that out of our panelists, I'm the only one that's not a lawyer. So Simon, if you throw me any very difficult questions, I shall pass them off to one of our esteemed counsel who's joining me virtually on the panel. I'm but a humble corporate service provider and trustee.
Modesty is a very desirable virtue.
You asked a question about the BVI trust legislation, and I think I really like the way that you framed the discussion, and the panelists spoke about the fund legislation. And a lot of the fund legislation demonstrates innovation. It demonstrates practicality for people that are in the market. It's generally, or can be, cost effective, and is modular. So you can start at a low point and build your way up depending on what you want. And that's what I would like to kind of describe the trustee legislation in the same way, that there's been a lot of innovation in the legislation, and we'll touch on a couple of those pieces around private trust companies and the VISTRA trust regime. But it's modular. You can start again at a cost-effective, straightforward, commoditized product, and to go to something that is very, very complex and to last generations. I won't go into too many details. This is an investment summit, but to those that are listening, it is important how you structure both the assets, but also how those assets are owned and how they are held. And I'm sure everybody listening is going to be fantastically successful at some point, and there will be the good problem of succession and planning and all of those kinds of things. So I know that sometimes for managers, it's a bother and it's a hassle to get these things done. And sometimes the money being spent on the structuring feels like money and time that could be spent on building the track record, getting the incubator fund up to the next level. But assuming success, that is time well spent and money well invested in structuring for the future. So just to go on to a couple of things that you mentioned around the private trust company and around the VISTRA trust. And I'll use one word that I think is most significant, and that is control. And I think that that's really important for people that are managers who are running assets, who look into the future. And also I think it's very important culturally in the Middle East as well, where there isn't necessarily the Anglo-Saxon history of discretionary trust, where you're handing all of the control over an asset to a professional trustee and effectively trusting them to hold that and to get on with diversifying and running that. So the way the BVI trust legislation has been crafted is so that without violating trustee legislation and courts and all those aspects, that there is the maximum amount of control that is possible. So PTC stands for a private trust company, does what it says on the tin. This is effectively a way of running a company, and the BVI is obviously a leading jurisdiction for companies. It's a company which is run as a trust company for effectively a family trust. So you can have family members, patriarch, matriarch as the directors of that entity. There's some sophisticated ways of owning that private trust company, but it's just a cost-effective and easy way of actually running your own trust. It's not for everybody, but it is very attractive, and we see a lot of those being set up in the region. And the other piece that I just wanted to talk about is the VISTRA trust regime. VISTRA stands for Virgin Islands Special Trust Act. It's been in operation for 15 years now. Exceedingly innovative. It's been copied by many, many jurisdictions now that have their own kind of copy of this legislation. And basically what it's designed for is to cater for the needs of owners of family business who require autonomy in their business operations, but allowing the owners, fund manager, to deal with succession. So for example, it avoids probate. So probate in the BVI can be public, can be expensive, can be time consuming. It avoids that. Show the heirs can pass to successors. The office director rules can dictate who is the director of underlying entities in subsequent generations. So there's a whole host of things that can be factored in there, from very straightforward to quite complex, again, modular, to accommodate the business owner. So I'll kind of wrap it up there, but I think that the pieces that I wanted to reiterate is this really kind of mirrors the fund legislation. A lot of innovation, a lot of practicality. These are services and products that have been catered for the market. and modular, starting at simple, straightforward, very cost effective, and going up to something that's very, very complex.
Well, thank you very much. I think that was very, very well described. And the important issue, as you alluded to, is the fact that product innovation goes well beyond funds. It's trusts, business companies, LLPs were referred to earlier by one of you. And no doubt that process will continue and respond to increasing needs. I want to now go back full circle to Phil Graham in the BVI. Phil, I know that you're heavily involved in the digital space or crypto. Can you elaborate a little in terms of the funds that they are preferring and what the real trends are in that market at the moment?
Absolutely, an incredibly hot topic with the PayPal announcement recently, and you know, and Bitcoin doing what it's doing. So for those that are invested in Bitcoin, as long as you didn't buy in December 2017, you're probably doing very well. So congratulations. It's a fascinating topic. We jumped in 2015. We had a lot of people on the West Coast who I can vividly remember sort of telling me that they wanted to run a fund vehicle. They had this new asset called Bitcoin, and their plan, when I described, well, is this long short strategy? You know, what is it? Where does this fit in the traditional fund? I said, no, we're just going to hold Bitcoin and it's going to make us a lot of money. And then they would give me a ludicrous fee schedule that would sort of say, we're going to charge 3 and 30 for doing that. And I would say that I don't understand. So you're doing literally no management. You're buying something that I don't even understand what it is. You're holding it for a long period of time. It's going to make lots of money and you can charge 3 and 30. That sounds like a truly wonderful system. Put down the phone, tell them, of course, we can help you with this. I put down the phone and immediately Google Bitcoin and try and work out what it was. And we loved it. And it's, once you get your head round exactly what it is, it's just another asset class. And everyone on this conference will have done, you've seen fine wine funds before, you have seen vintage car funds, we've seen art funds. It's another asset class. And that's how we immediately sort of conceptually dealt with it. What that kind of fund comes with are complexities around things like custody. Your traditional custodians that we would normally see for traditional fund vehicles don't apply. And when people start getting into hot wallets and cold wallets and what on earth is a wallet in the first place, it becomes a very complex question. What I loved is that we sat down with, again, the Financial Services Commission back in 2015 and said, look, we have a whole raft of these things. They're looking for a home. A lot of jurisdictions don't want to touch them. For a variety of reasons. A lot of service providers don't want to play in this space. Are you interested in helping us explore it? Because we really believe in it. And the Financial Service Commission embraced it. We brought in people to do presentations on the island. We sat down and went through the process, our understanding at that time as well. And they said, absolutely, this is something we understand. And perfectly, the Incubator Fund and Approved Fund was so well placed for it, because we sort of we've done probably about 160 crypto asset focused funds, I would guess. And we would traditionally see that it's on about a 10 times ratio. So a $20 million crypto asset focused fund, we would see as a $200 million fund in the normal place, because of the complexities around and the volatility and everything that comes with it. And so they're so neatly put into this world. And the other thing you find is the traditional path of other jurisdictions that may normally have taken this type of work were A, not that interested in it, but actually B, the type of fund managers that were coming to this space weren't really fund managers at all. You know, they were traders. I had clients that were sort of 19, 20 years old that were absolutely fantastic minds and had incredible ideas of where crypto was going and where the digital asset space was going and how much blockchain is going to revolutionize the planet, but had no idea what a fund was, had no idea how to set it up, had no idea what the infrastructure was. And so it allowed us to bring in these vehicles that didn't surround them with too much infrastructure, allow them to really express themselves, to pivot where they needed to be, to express the volatility and change, bring in investors from all around the world. They were fantastic vehicles for that, and I'm so grateful that, frankly, the Commission really embraced it and continues, as Phil Ireland mentioned earlier, continues to look at this space with the new legislation, again desperately not wanting to impose too much red tape. The FSC has a wonderful history of not wanting to be too heavy-handed in the fund space, wanting to put the appropriate wrapper around things, so make sure that we're fulfilling all of our international obligations, making sure that we remain on all the white lists that we still remain on, but still not constricting the the manager too greatly, and that is just perfect for the crypto space.
Good, and of course it's perhaps worth mentioning that the Commission have now mandated a fintech sandbox regime, which is most welcome, and they did consult very widely with the industry with that. And perhaps another product just to allude to is the business company, which is very popular with a lot of fintech entities, including a number of exchanges. So another example of innovation. Let's switch straight back to the DIFC, if I may. Tom, any perspective from your side in terms of activity and interest in the digital space?
Yeah, I mean, I think probably echo what you're saying. It's almost like I think the cryptocurrency space is sort of a version 2.0 now, and you know, the first version was a lot of people who were unfamiliar with the asset class, people who were unfamiliar with the funds regime. Now what you're seeing is people who've got a lot more of an understanding about both of those things. And as an asset class, I think cryptocurrencies is being more respected. And you know, there's a lot more customized service providers who are bringing, you know, unique custody services or other services to that space. So I think the ecosystem has evolved, and I think the Middle East sort of prides itself on being at the forefront of, you know, tech innovation. And so we've seen a lot of the governments in the Middle East really support these sorts of initiatives, and that can be in terms of sandboxes, also in terms of sovereign entities that have you know, been seed or anchor investors in some of the VC funds that might have a focus on digital assets. I think that sort of has a twofold effect. You know, the funds allow the managers to get up and running, and then, you know, quite often the funds are mandated to invest into the local startups, and so that has a flow-on effect and sort of magnifies the local economic benefits. So I think Dubai and the broader Middle East region sort of is representative of the global picture. And I think cryptocurrency is really, it's an irreversible trend. You know, it's the native currency of the internet. And so, you know, I think all we're going to see is further acceleration and further sophistication in that space.
Good. And I suppose it's safe to say that COVID-19, if there's any positive, it's accelerated the process and pace of digitalization. Certainly on a more mundane level, who would have thought would have been using the word Zoom every 5 minutes? And personally, it's rather annoying me, but it is very useful. Phil Ireland in the DIFC, anything to add to what Tom said from the Middle East perspective?
I'd reiterate that. I mean, I think, you know, what's going on here is going on everywhere in terms of the sort of abundance of interest in crypto assets and everything, you know, as you say, everything suddenly being digitized, and we're all, you know, ourselves digitized and living in a virtual world almost. So yeah, no, I just reiterate, and I guess in terms of the BVI's approach to all of this, yes, I mean, and I know we've said this many times, but innovation is key, and they do really, as Phil Graham has very clearly indicated, the government are very keen to listen and to create, which is unusual, I think, in terms of other jurisdictions with a similar approach, and I think that's to the credit of the BVI, and certainly they seem very willing, or the government seems very willing to consider all options and are very amenable to new ideas, which obviously benefits us as service providers and also benefits those who are watching this presentation in terms of their ability to undertake business of all variety.
Good, thank you. Jeff, in the BVI, I know that you've done quite a lot on the ICO and the crypto space. Are you seeing a rapid growth of innovation lending itself to our BCs and our funds?
Short answer is yes. BVI has been, as we're all aware, one of the key jurisdictions in terms of the growth in digital asset and creating an environment, a very positive environment for entrepreneurs and managers in the sector to grow. I mean, we've seen a number of cryptocurrencies exchanges being launched out of BVI. Phil mentioned earlier in terms of it being a different asset class, and that certainly is, and it gives a bit of diversity, but also the asset classes below digital assets itself, whether it be property-backed tokens, ESG funds, things that I'd like to see at the remittance market, where crypto is very well suited and certainly I think is going to be a massive growth area in the future, as is the maritime shipping industry in terms of using blockchain technology. And of course talking digital assets, but the blockchain technology is really going to be a big driver of that in the future. So certainly I think it's, as Tom mentioned, I think it's a natural progression. Everything is being digitalized. Money being digitalized is a natural progression. I think it's certainly just going to grow in the future.
Great, and obviously, as some of these incubator funds and VCs make their owners immense riches, we must remember their trust and succession planning with the VISTRA Trust. So over to Simon's firm and others in linked with BVI links. I now want to just move on to the issue of extraterritoriality, and that is really often seen as a trend in terms of the growth of tax revenues or seeking tax revenues. And the most recent manifestation is perhaps the European Union's economic substance requirements. My simplistic understanding is that funds have been dealt with relatively benignly. I hope I'm not being naive, but Phil Graham, any thoughts from your point of view?
Yes, I think that's a fair answer. I mean, this is brand new law, as you know, Simon, and it's constantly evolving. And I think the complexity around law that has been imposed on, obviously not just the BVI, but an enormous amount of jurisdictions around the world by the EU, means that jurisdictions are finding their feet with it. And I think, you know, having been involved, as with a number of these panelists, having been involved with this, frankly, dating back almost to sort of 2018, when we first realized this was properly coming down the road, it was again a real compliment to the BVI that the government reached out to the private sector, and we formed committees and we sat down and we had very sensible conversations between the government, between the International Tax Authority, between the Financial Services Commission and the private sector, trying to make sure that the law was correctly put in place, and that was very key to make sure we remained on a whitelist, but also allowed the most amount of flexibility for our traditional client base. I mean, there are an enormous amount of BVI companies out there on the planet, of which funds are clearly a very important part and very dear to my heart. But still, the beauty of the BVI is, I always describe it as a jack of all trades. The legislation is so flexible that it has allowed people to use our vehicles for so many different things, which meant economic substance in the BVI was always going to be, frankly, more complicated than probably anywhere else, because people just have such a multiple of uses for it. But I'm really proud, frankly, of how it's been implemented, the effect of all of the great service providers you have on this panel, the effect of how we've all jumped to the attention of dealing with our client base, with dealing with people asking questions, and whether that's restructuring or whether that's making them more comfortable with the fact that actually, as you rightly say, Simon, it hasn't been a big imposition in certain spaces, and funds is a crucial one there. And actually, it's allowed all of us, and I'm sure we'd all agree, it allowed all of us to really get to know our clients better. And fundamentally, as people based quite remotely because of our huge international spread, we often don't get to meet clients, frankly, you know, let alone really get into what their business is. This has allowed us to really get to know our clients a lot better, to understand their business, to help them work with it. And I actually think it sets us up very promisingly for a pretty good future, actually.
Good. Well, Simon, I think you're right.
Maybe Simon, sorry, if I could next, I just want to pick up on one point around that kind of economic substance piece, and it's going back to some of the other comments, and it's around the use of technology. And we operate in 46 countries around the globe. Lots of these jurisdictions have economic substance, and the BVI is handling this among the best in the world, even though the portfolio of companies that it has to deal with is one of the largest, and it's dealing with this well through technology and through the BOSS system, which was established to satisfy central beneficial owner register requirements a few years ago, and then add-on element to enable clients to do their economic substance reporting. So again, it's this innovation piece, consultation, as has been mentioned a few times, between private and public sector, and then allowing that to help and to make things easier for clients. So some of those key pieces as well.
Yeah, well, thank you very much. Gentlemen, I'm afraid our time is almost up, but if I could ask each of you very quickly to give one prediction for the next 2 years, and any thoughts? Anyone like to start? If not, I'll nominate someone. Don't say COVID version 2. Tom Cochrane, I'll start with you. Any thoughts?
I think there's just the continued volatility for quite some period given COVID. I think it's the aftermath. I don't think sort of normality as we previously knew it is coming back anytime soon. But I think, sort of a recurring theme throughout this discussion has been innovation. And I think if you look at some of the past crises, even just at the credit crisis a decade or so ago, many of the biggest companies today were formed during that crisis. So I think out of crisis comes innovation. So I guess my prediction is that some big names 10 years from now will be companies that are being formed in a backyard or a garage somewhere at the present.
All right, Jeff, Kirk, quickly.
Yeah, no, I'd reiterate what Tom has said. I think innovation is going to be the key. If you take the lessons of history in 1918 with the Spanish flu, the raging 20s were some of the best commercial years, of course, followed by the Great Depression. But I think we do need to learn from history and, looking again at private equity. I mean, there's something like $2.5 trillion in dry powder waiting for investment options. So I certainly think once we come out of COVID, we're in for an interesting period. And I think it could be a real expansionary period.
Good. Very, very quickly, Simon Fulmer.
Yeah, I referenced in my comments beforehand about other jurisdictions. We know that some jurisdictions around the world have been under pressure. There's been blacklisting by the European Union and others. That the BVI is not blacklisted. It's on the white list. It's free of any sanctions or restrictions there. And our prediction has been for some time that quality jurisdictions that play by the rules, but that remain innovative and work with their clients will be those ones that survive for the long term. Not every jurisdiction that's operating now and providing financial services will make it. Some will fall by the wayside. We're seeing that now, but we believe that the BVI will be around for the long term.
Very much the right attitude. 2 Philips to go. Philip Ireland, quickly, brevity, please.
Yeah, very quickly. I mean, just following on from what Simon was saying, I mean, I think that, we will still be here, of course, in terms of the human race will still be here and the offshore jurisdictions will still be there. And I know that there are challenges facing all offshore jurisdictions, and that will continue, I have no doubt, from pressure from international organisations. But I would reiterate Simon's point that the BVI will be amongst the survivors. I have no doubt about that at all.
Good. And Philip Graham.
This is going to sound very negative, but my prediction is we're in for an absolute mess of a stock market for the next 5 years, which for a whole bunch of reasons. But actually, I think that's awesome for the funds industry. You have seen so many fund managers for a long period of time moaning about ETFs, moaning about the solid performance of the S&P, moaning that they can't justify their fee structures because, frankly, they're being outperformed constantly. You're going to see massive volatility. That is a fantastic opportunity for every fund manager out there that's got a great idea, that's got a great concept, and I think you're going to see the rise of the fund industry accordingly.
And also a good time to stress debt, distressed funds, the rise in litigation, insolvency. Always look on the bright side. There's always an opportunity. I think it was Churchill who said, why let a good crisis go to waste? And he certainly had a number that he dealt with relatively well. Gentlemen, thank you all very much for your valuable time. And thank you to Terrapin and the Middle East Investment Summit. But most importantly, thank you to our audience. We've enjoyed sharing our thoughts with you. Goodbye.
Thank you.
Thank you.
Thank you very much, Simon, and to the speakers as well. That was a really great discussion. I'm sure there'll be a lot to take away from it. Yes, do stick around for the next session and see you next year at the Middle East Investment Summit, hopefully.
All right.
Thanks all.